Yo, what is going on, guys? Welcome back to another video. So in today's video, I'm going to be speaking about the 3 confirmations that you absolutely need in order to make sure that your order block or institutional candle setups are actually high quality and high probable. By applying these 3 things that I show you in today's video, you're going to increase your win rate a lot more. So what you want to do is you want to make sure all the way to stick true to the end of the video, because everything that I'm going to show you here is actually not the usual generic things that you be seeing on YouTube every single day. A lot of people simply just struggle with systemized systems and mechanical systems, and this is exactly what I do on this channel. So make sure to go down right now and click the like button and subscribe, and also make sure to go ahead and follow me at MomoFUFX on Instagram. I post a lot of trade talk on there, day in the lives. And the last thing that you want to do is go down to the description and join my free Telegram mentorship link. Everything, all the updates, everything that I ever post about, you get access to everything early on there. So make sure to head down there right now and join. Now, without further ado, guys, let's get straight into the video. This is one that you're going to want to watch all the way through to the end. Okay, so here are the 3 order block rules that you want to implement in every single setup that you take. Before we move on to the first one, let's take a look at why do people lose a lot with ICT and SMC trading. Now, one of the first things is always people have no clear entry triggers. So they struggle a lot. They don't actually have any rules when it comes to order blocks. This is why a lot of the time end up losing a lot of setups. And like sometimes they're losing like 10 setups in order to win just one. The problem is the strategy is very wide. So maybe on the first trade, they have 3 confirmations, and on the second trade it's another 3 different confirmations. On the third trade, the confirmations are mix and match. So every single trade has different sort of confirmations, and this is bad because essentially now you're leaving yourself more susceptible to more losses, because essentially with these different confirmations you're essentially using a different strategy. So when you're mixing the maximum drawdown of a strategy and you're mixing all of that together, if you get into a losing streak on all of these 3 strategies that you've used, you're leaving yourself susceptible to some insane drawdown essentially. So you want to make sure that every single thing that you do is always the same. And the next thing is, a lot of people just trade lower time frame order block. You have to think, what is the purpose of an order block? Okay, what does an order block do? And once you understand what an order block is and how order blocks actually truly work in the market and the algorithm behind it, you'll understand that these lower time frame order blocks aren't actually that good. So I would definitely stick with the higher time frame ones, 1 hour plus. Now, one of the first things that I like to take a look at is order blocks in extremes. I want to see an order block in an extreme of a range. Now, we all know and understand at this point that we only want to take order blocks along the trend. You want to make sure that the trend is your friend, so you don't want to be taking any counter setups. This already eliminates 50% of the order blocks that you would usually take, making it much easier for you to get into good setups. So you want to make sure you only trade order blocks in extremes. What I mean by extreme is it's an extreme premium or an extreme discount. So as you can see right here, from the top of this range to the bottom of this range, this order block is in the extreme. Now, I would have skipped this one or this one, etc. Anything below the 50% I would completely skip. I would always aim for the extreme. Doesn't necessarily mean that price is always going to tap into the extreme, but that's my requirement. And if price doesn't meet my requirements, then that's totally fine. I have no interest in trading. Even if it takes a whole month for my requirements to be hit, that's totally fine, because I'm not dying to get into a setup. The setup has to come to me. I don't chase. Second, you want to make sure that the order block has a lot of support to the left. And I'm going to show you how to, in a second, we're going to go onto the charts and show you examples of this and how to find these order blocks in extremes using Fibonacci. We already looked at that on the last video discussing premium discount. So if you haven't already, make sure to check that video out. Premium and discount, drop down to the link in the description. You'll find it there. We also have number 2, order blocks with lots of support. So what you want to see is a lot of support resistance to the left of the order block. This is very powerful, because if you see that to the left right here, there's been a lot of trading activity. This means that there's going to be a POC right here. So the point of control is going to be right here for that day or for that range, essentially, meaning that most of the trading activity occurred here, meaning that this area has a lot of demand because a lot of buying and selling has occurred in this area before. So you can expect that there's going to be some interest potentially in entering again, participation again, once price reaches that price level. So I always want to find an order block with some support to the left of it. The third point here is that we want to find an order block with an imbalance just below it or above it. So in this example right here, this order block, right, had an imbalance just below it. This is good because essentially it means that price had to came back here, rebalance this area, and also mitigate this order block. It adds that extra confirmation when you have an imbalance, or FEG as ICT traders like to call it. So it adds the extra confirmation. Now what we're going to do is we're going to hop onto the chart now, and I'm going to show you some live examples of this occurring in the market. So the first example here for me is on Euro NZD on the 3-hour time frame. So what you can see here is we got a change of character, or a market structure shift, etc. So that means now we're looking for only shorts on this setup. So what you want to do then after that is you want to mark out all the potential short opportunities, which are all essentially the bearish order blocks. We would have one right here, and we'd also have the second one being right here. Now personally I would have chosen this one because essentially there's no imbalances for it above, and this one is in a perfect extreme for me. So usually I would go for the one lower, especially if we're in the extreme already. So then to calculate the extreme, all you have to do is take a look at the highest point, which is the high right here, and drag it down to the low. So as you can see right here, from this high to this low, we take a look at our premium and discount levels, 88.6, 78.6, and 71. So as you can see, this order block perfectly lines up with the 71. Next, we want to make sure that price also has an imbalance just below it. So as you can see here, we have an efficient price action just below it. So this takes our order confirmation. I'm just gonna delete this as well. Lastly, what we want to make sure is we want to make sure that to the left, we have a lot of support or resistance. So as you can see right here, when you break it down, you go into the 2-hour time frame, you see that in line with this order block right here, I'm going to delete everything else. In line with this order block, the point of entry right here, you have a lot of actual resistance to the left. So you have the resistance right here, right there, right there, right there, right there. This is good because essentially a lot of trading occurred at this level previously. So this trade essentially would have ticked all my boxes. I would have entered this trade. Regardless of if it worked or not, it doesn't matter because I followed my system, and based off of my back testing, based off of the data, I've followed my system. And if I do and repeat this mechanical system and strategy over and over again, over a long period of time, I will be more profitable than I am losing. So that's essentially what trading is. You want to find something that works, okay, and you verify that it works by back testing and looking at the data. Once you do that, you make sure you want to stick to it throughout the whole process. You want to make sure you don't essentially diverge from the confirmations, confluences, and processes that you've already set out for yourself. We're going to take a look at one more example to drill this home. So here's one last example on GJ right here. So overall structure is to the upside, clear. So what we want to make sure is we want to make sure that this is at the extreme. So I'm just going to use my replay tool just to make sense of everything right here. So we want to make sure that this point of interest is at the extreme, which it is. So we drag from the low to the high, and essentially this is the lowest point right here. This is the lowest order block, and it lines up with the 71. So that's confirmation number one, tick. We want to then look down, and we want to make sure that there's a lot of trading. So you want to make sure that there's some sort of support around this order block. It's not just one random order block in the air. Like for me, this one, I wouldn't sell from this one because there's no support to the left. But when you take a look at this area, there's clearly a support right here. So then what you want to do is the last thing. You want to make sure that this order block has an imbalance below or above. So as you can see, we're looking for buy setups right here. So as you can see, we actually have imbalances just as we approach this zone. So we have imbalances all throughout here, meaning that there's a very strong chance that price is actually going to come down here. And essentially you just place your order right here, tap in, and away it goes. That's it. Beautiful, beautiful setup. So that's pretty much it. 3 simple rules that you follow. If you implement it, back test it, you'll see the power of this. Now, that's pretty much it for this video, guys. Make sure to drop a like on the video, subscribe, and as well as that, make sure to check out a free ebook that I've prepared for you that's going to actually take your trading to the absolute next level. It's going to introduce you to a concept you've never heard of before, and it's very, very powerful. So just take a quick read of it. It's 20 minutes. But with that being said, I appreciate every single one of you for watching all the way through to the end. Leave a comment down below on what you want the next video to be, and I'll catch you guys on the next video. Have a great day.